Why do we see the same number week after week when it comes to recent jobless claims? It's an intriguing question, isn't it? Is it a glitch in the matrix? Or perhaps some cosmic joke being played on economists? No, it's actually due to a consistent jobs picture reflected in seasonal adjustments to the data, according to a spokesperson from the Labor Department. It's uncommon, but not unheard of, to see identical numbers like the 212,000 initial claims we've been seeing. This unusual consistency in jobless claims numbers has its roots in the stable employment situation we're currently experiencing. The Labor Department attributes this to the seasonal adjustments they apply to the data. These adjustments are necessary to account for the expected fluctuations in employment during different times of the year, such as holiday hiring or summer job losses. The International Monetary Fund's economic counselor, Pierre-Olivier Gourinchas, has also given us some good news. He states that the risk of a global recession is minimal, and it would take a significant event to derail the current economic progress. This is due to strong economic performance by the US and several emerging market economies, along with inflation falling faster than expected until recently, despite weaker growth in Europe. However, he also warns of potential threats to economic growth, such as escalating tensions in the Middle East. Meanwhile, over at the IMF's Monetary and Capital Markets Department, Director Tobias Adrian is expressing concerns about high corporate valuations. He warns that market optimism has driven company valuations to a point where they could become vulnerable to an economic shock. In the United Kingdom, inflation has eased less than expected to 3.2% in March, sparking concerns of US-style stickiness. The core figure, excluding energy, food, alcohol, and tobacco, came in at 4.2%. compared with a projection of 4.1%. Despite these potential risks, the IMF has raised its global growth forecast slightly, citing that the economy has proven surprisingly resilient. It now expects global growth of 3.2% in 2024, a modest 0.1 percentage point increase from its January forecast. In the US, there are concerns that the economy could be headed for stormy waters in 2025, if the Federal Reserve does not act soon on interest rates. State Street's head of investment strategy in EMEA, Altaf Kassam, warns that classic monetary policy mechanisms have broken, meaning that any changes made by the Fed will now take longer to impact the real economy. On a brighter note, retail sales jumped 0.7% in March, much higher than expected. Rising inflation didn't deter consumers who continued shopping at a more rapid pace than anticipated, a testament to the resilience of the economy. In conclusion, while the consistent jobless claims numbers may seem unusual, they are reflective of a stable employment situation. The economy appears to be holding strong, with threats being carefully monitored. The resilience of the global and US economies, as well as strong retail sales, provide reasons for optimism. However, high corporate valuations and potential inflation stickiness serve as reminders that vigilance is necessary to maintain stability.